to Exponential Finance, the podcast covering finance, technology and innovation, from our home in Japan and beyond. Today's episode covers the difficulties for UK and other foreign companies breaking into the Japanese market, why there is increasing cause for optimism, and how the new free trade agreement negotiated between the UK and Japan will bring new benefits for UK companies. The Comprehensive Economic Partnership Agreement, or CEPA as it is known, is the first agreement that the UK has secured that goes beyond the existing EU deal, with enhancements in areas such as digital and data, financial services, food and drink, and creative industries. And now, please welcome Darren Goff, Head of Investments, Japan at the Department for International Trade in Tokyo.
Good morning, Darren. How are you?
Good morning, Norbert. Thanks very much for having me. I'm very good. Nice, brisk, sunny autumn morning in Japan.
The best time of the year, really.
Absolutely. Get past the typhoon season, get past the rainy season, and you're into a nice, clear, sunny autumn. So always my favorite time in Japan too.
We met a few weeks ago when we had an investor bridge between London and Tokyo. It was primarily, I would say, London or UK-based investors, and we learned a lot about how they are viewing Japan. In your role as the head of investments at DIT, you also see both sides of the equation. So your primary focus is on helping the UK attract investment, but obviously then you're helping also UK companies entering the Japanese market. There's lots to talk about, no less the trade agreement that was concluded now it's 3 weeks ago.
With the Secretary of State coming out to Japan and signing the trade agreement. And so really positive news there.
That was actually the first trade agreement for the UK.
Yeah, it's the first that's been concluded by the UK, and it was done in record time. One of the fastest, if not the fastest, trade agreement to be agreed in history. So hugely positive, I think.
Which intuitively, the fastest agreement jointly signed with a country like Japan that isn't necessarily known to move very quickly came a bit as a surprise, I think, for many people. What is feedback that was received since then?
Yeah, so I think the feedback's been really positive. There seems to be a lot of excitement on both sides. So excitement from UK businesses to explore a new market, excitement from Japanese businesses to increase the commercial links. There's been a lot of success on both sides over the past few years with increasing commercial links and stronger partnerships between UK businesses and Japanese businesses. If we look at the likes of Ocado, the online grocery store, which signed a deal last year with Aeon, focused on using its AI and robotics in Aeon's warehouses in Japan. That's just one example of the increasing strength of the relationship. With the FTA, which has an ambitious new digital chapter, that's one of the more ambitious elements of the FTA between Japan and the UK. That gives some even greater opportunities for both Japanese investment into the UK and UK companies coming out to Japan to export and also set up in this market. So I think it should be hugely positive. And then now we're going through a process with Tech UK and JATA and other interested bodies and companies to see how we can really support businesses on both sides to really make the most of it and maximize the benefits. It should be a bright future, I think.
I wanted to ask, what is the difference between the previous EU-Japan agreement and now the UK agreement? You alluded to that a bit with the digital chapter. Can you elaborate on what it includes a bit more, please?
Obviously, a lot of elements are quite similar to the EPA between Japan and the EU, but there are some areas where the UK-Japan FTA is more ambitious, where there are some slight differences which should prove advantageous to businesses on both sides. So the digital chapter was the one I pointed out, and areas there about kind of strengthening protocols in data sharing, strengthening protocols in data localization, those kinds of aspects, and a new focus on e-commerce as well. Those areas should be really positive. So I think, for example, where UK companies are looking to come out to Japan and set up, especially UK tech companies, scale-ups, FinTech companies, etc., the proposals on data localization should be quite useful for them and should allow them to avoid costs and some of the regulations that would be there otherwise.
So obviously, FinTech is a particular strength in the tech sector, in the startup sector in the UK. How big is that opportunity for mutual collaboration between Japanese and UK companies?
Yeah, it's really significant on both sides. So the FinTech sector in the UK was worth around £7 billion last year. And there's about 2,000 FinTech companies in the UK. And some projections say that that's going to double by 2030. So it's a big sector. and it's one of the global leading fintech sectors. If I view this from a UK company's lens, then actually Japan, again, is a global financial center. It has huge mega banks. It has a big population. But Japan perhaps is a little bit behind the US and the UK and some other European nations in terms of its development of scale-up companies. For UK scale-up companies to actually come to Japan and to support the big Japanese blue chips, the Japanese mega banks, to digitize better, to have a stronger, more radical, more modern interface with customers. And in terms of B2B working, it's a great opportunity for UK scale-ups. It's not always an easy market to break into, the Japanese market, but I think the opportunity is certainly there. And the one thing we always say to UK companies is you can't come to Japan just once a year on a trade mission. You need to spend your time in Japan. You need to invest in relationships, build relationships, have a presence on the ground, invest time in terms of kind of shaping your relationship with Japan. And if you do that, there are some big opportunities here.
There's obviously collaboration between all the DIT offices that are across Asia. There's a little bit of healthy competition as well when you have, say, a fintech startup looking at an entry to Asia overall. And the key question is always Singapore, Hong Kong, or Japan first. Where do I go? And you're fighting a bit harder for that being Tokyo in the future.
We describe areas of difficulty in terms of companies setting up in different markets as market access barriers. And I think there are market access barriers in the Japanese market. We're working quite closely with the Japanese authorities. So there's a really good cooperation between the City of London and Tokyo Metropolitan Government, and a real focus from Tokyo Metropolitan Government on making Tokyo a better place for financial companies to do business. There are still some examples, quite hard to get banking licenses. If you're a smaller company, the capital requirements can be quite stringent, and it can make it quite hard for scale-up companies to break into the Japanese market. Up till recently, there was a 1 million yen transfer cap on foreign companies that wanted to make transfers of cash and capital into Japan or help other companies to do so. That's a good example where actually that cap has now been lifted, and that does make Japan a more business-friendly place for companies to come and invest and to trade. But there are still a number of what I describe as market access barriers in the Japanese market. And as the authorities start to release some of those and make it a bit easier for foreign companies to break into the Japanese market, I think that will improve Tokyo's competitiveness compared with Singapore and Hong Kong. Still a little way to go, though.
Interesting enough, just on Friday, there was the FSA announcement that they are forming an English-speaking team now to deal with applications in the asset management industry in particular, but their 2021 plan certainly includes more English language communication across the board and will also then hopefully eventually extend to the fintech sector. Although you're absolutely right, and I agree with that. And the community across all the chambers of commerce has been vocal across the other barriers to entry, primarily taxation, which is a national government issue rather than a regulatory issue, of course. So a little more work to be done. I've met Revolut when they came to Japan first, which literally was 3 years ago for the very first steps. And clearly it's one of the, if not the most successful, at least most highly valued UK fintech startups. And even for them, it took 3 years to be fully up and running. And there might have been some twists and turns in terms of the expectations. But for any startup, 3 years is a very long time.
Absolutely. So that whole ability to kind of set up quickly in a country, the hard barriers, which are perhaps the regulatory barriers, one of which I've mentioned already in terms of licenses, but then some softer barriers in terms of it's quite hard sometimes to recruit bilingual staff. In Tokyo, there's some points about taxation that you've mentioned, which sometimes makes it hard to attract expats, and expats might find it more comfortable to be in Hong Kong or Singapore. So there's softer barriers and harder barriers. What's really positive is that Tokyo Metropolitan Government, Governor Koike is very much showcasing Tokyo as a global financial center and looking to improve things. And then also you've got initiatives by the METI and other departments within Japanese central government that's also very much looking at how do we improve the Japanese startup and scale-up system. You've got initiatives like the J Startup program, where METI have taken Japan's 100, 150 best, most promising scale-up companies and is looking to support those companies to get up to unicorn status. Because one of the issues Japan's had, I think, is a lack of companies coming through to become unicorns. The numbers of Japanese unicorns can be counted almost on one hand or at most two hands. Development needs to happen there in terms of improving the Japanese scale-up system too.
If you compare the UK startup scale-up system with the Japanese one and the results succinctly described just now, where do you see the cause for this big difference in terms of the phase of development, the phase of maturity we're finding ourselves in here in Japan?
There's almost perhaps three things which Japan needs to look to address and is actually looking to address at the moment. So one is perhaps a lack of liquidity. So a lack of VC finance, a lack of angel investment in its domestic startup and scale-up community. The second point is perhaps a number of Japanese companies, a high proportion of Japanese scale-ups, are very domestically focused. So they're not thinking about going global, or they're a little bit daunted by the opportunity to go global. And that actually means that their growth prospects from the start are quite limited. Whereas if they were more willing to take that global step, they'd be able to grow much more quickly. And then the third is perhaps culture of entrepreneurs, which is there in Japan, but it's a bit hidden. And maybe there's some cultural elements of working for a big company and having a job for life and wanting to get that stability, which is something that people feel they need to do, and which is something sometimes the parents-in-law push people to do. Those three things need to change. And if I compare Japan to the UK, I would say actually VC investment is at record levels in the UK. And I think investment into FinTech overtook New York and London very recently. There's record levels of VC investment into the UK. Then points about companies come to the UK, set up in London, and then use London as a hub from which they can expand globally. And even, some Japanese companies actually set up in London, set up in level 39. Draming is a good example of a Fukuoka-based company that set up in level 39, set up in London, and now is expanding to other regions like India from their base in London. So that more ambition. And one of the things we're trying to do in the embassy is trying to get some Japanese startups and scale-ups to set up in the UK, provide them with appropriate support, and help them to use the UK as a base to break into Europe and to expand more globally.
Clearly, London is a very convenient spot if you try to run a global business, because you catch both sides, right? You can wake up and still deal with the second half of the Asian day, and then you deal with the first half of the Americas day, and couldn't be any better positioned, really. For running a global team, London's always been a super spot.
Yeah, so I think we've got the benefit of the time zone. The language, using English is an advantage for foreign companies. And I guess the other thing that's been quite helpful over recent years is just having London as a financial centre, but then having the technology scene developing in Shoreditch in East London, and then having the regulator, the Financial Conduct Authority, also in London, and having the regulator, the financial hub and the tech hub, all in the same city. And you can literally walk from the city of London to Shoreditch and vice versa on foot. So everything's very well connected, and there's lots of opportunities for innovation to develop and collaboration, which is positive and is a big attracting point for US investors and Japanese investors.
Since you mentioned the regulator, one thing I particularly like about the FCA has always been the sandbox, where the FCA has really been leading among international regulators, but then also focused on bringing together international regulators in this Global Financial Innovation Network, or GFIN. But also just recently, they announced the concept of the global or international sandbox. So you have now 13 or so regulators, I think it's probably more, that are partnering up. And so with one application, you can pick which ones you take part on. And that's really led and driven by the FCA. And the pet peeve on the flip side is that neither the BOJ nor the FSA are unfortunately part of that. So if they were, there would be a different level access to the Japanese market again.
Yeah, I think that regulatory innovation across borders, which, as you say, Norbert, has been led by the UK FCA, is really important. And it can lead to companies that can just showcase their innovation and really move it forward at a very fast rate. So while Japan hasn't quite moved its way into joining that new initiative so far, they're developing their own regulatory sandbox here. And we've had some really good conversations with the Japanese regulatory authorities about moving that forwards. So I think there are open minds here in terms of how that can be taken forward. I'm hopeful that that will increase in pace in the coming years and really give some good opportunities both to Japanese scale-ups, but also to UK and European scale-ups in coming into the Japanese market.
So you're pretty optimistic there for Japan model to follow, basically.
One cause for optimism is probably some of the changes we've seen during the course of the pandemic, which globally has led to an acceleration in technology. We've seen that in Japan as well. So I guess one of the other issues in Japan in terms of lack of digitalization is perhaps in the culture, the consumer culture, but also the business culture, a reluctance to move away from going shopping with wads of 10,000 yen notes, a real cash economy rather than a digital economy. COVID's meant that both banks and consumers realised that hasn't been feasible. So there've been more people opening online banking accounts. Companies have moved away from their reliance on having the Hanko stamp being required for paper transactions towards more online approvals for contracts. And e-commerce has also boomed in Japan with shares in companies like Rakuten and telecoms companies like NTT and KDDI really picking up. There were probably a number of blockers in the way of digitalization. And I think the pandemic and COVID-19 has probably helped in a way to get rid of some of those blockers. And that might mean that actually Japan digitizes more quickly and more people do online banking. There's a faster uptake of FinTech and that creates more opportunities. So that does give me cause for optimism. Japan, by its nature, is fairly conservative. That does bring some advantages as well as some disadvantages. The conservative nature, perhaps, of Japan's banks and pension funds might mean that they are actually in a better position to weather the COVID-19 storm than some of their peers in other countries. So there's probably pros and cons. But I think one of the big pros for Japan is COVID-19 will lead to an acceleration in the adoption of technology in Tokyo and other cities.
And also to extend on that, you can see it as a positive, which of course has to be proven, is a late adopter status sometimes can help you if it allows you to skip one generation of the technology. And to some extent, I've compared it to India skipping fixed line telephony and going straight to mobile, for example. Some of the early digital models that people have been experimented with and that maybe were still relatively heavy, if you now decide as Japan Inc. that you're going the digital route, the technologies that are available compared to maybe 6 to 8 years ago offer fundamentally better capabilities and a much more efficient footprint as well. And so like the Okada example with Aeon that you gave, we had more of these where it really, maybe not even like a one generation leap, but a 2 or 3 generation leap that can be generated. It actually wouldn't take that long to catch up, probably.
Japan has so many strengths in technology in the blue chip companies that they have, the likes of Sony and Fujitsu and NEC and NTT, that actually, if it does make that clear decision that now it's going to move very quickly. And I think there are some signs of that with the new digital agency have been being set up by the new Prime Minister, Mr. Suga, recently, that it may go that way. Then I think, as you say, they could skip a generation and kind of move very quickly towards adoption of digital technologies. When they do so, that will open up opportunities for dynamic companies in the US and Europe and in particularly in the UK. And as well as the Okada example, we've also seen a UK company called Doddle working with Yamato Holdings, a logistics company recently, to focus on supporting software development in the use of logistics to make it more efficient and allow them to carry out their delivery business in a more efficient way. Hopefully, this will lead to more openness and, as you say, a real opportunity to perhaps skip a generation and move straight to cutting edge technologies.
Love the examples you have because they're really positive from a particularly aspect for me. Being in Japan for over 20 years now on and off, often what you've seen is that Japanese go a bit out to the edge. They figure out what's there, what foreign companies can offer, but then settle for a Japanese solution, which inherently is much more domestic and limited. Japanese companies very often operate internationally or at some point also create international subsidiaries. You create these two islands of software. You create the home office software island where everything runs on Japanese software, and then the international island that runs on the typical stuff like Salesforce and SAP and Oracle, etc. And these two never shall meet. There is this one venture fund, private equity fund in Japan, One Capital, that created a cloud index for 20 listed Japanese cloud companies. Not surprisingly, like any of the cloud and software as a service vendors, coming out of the March Valley from the initial hit of the pandemic. All these stocks skyrocketed, but these are names that nobody outside of Japan would know. And the risk is a bit that in this digitization push, the easy way is to go with the comfortable path and go with these domestic companies, but ultimately that would be limiting, I think, a bit in terms of global growth and global interoperability.
I really think so. There's a great opportunity for Japanese companies to actually learn and innovate globally. And that would be a massive advantage for the pace of their development and also dealing with some of the challenges and the competition globally. Big risk is that they continue to focus on the domestic market. And while the domestic market is big and strong, with the shrinking population, it's not a growing market. Limiting yourselves to the Japanese market limits your opportunities to innovate. One of the things that we're really keen to push as the British Embassy is Japan invests a huge amount into R&D. So Japanese R&D investment is about 3.4% of Japan's GDP, and that's really significant internationally. Some of that is done globally, some of that's done in the US, some of that's done in China, some of that's done in Europe and the UK, but a lot of it is done domestically. There's a great opportunity for Japanese companies to actually partnership up with UK universities and universities elsewhere globally and develop new innovative products and services and use their technology strengths to pair up with universities and startup companies to develop new products and services. So I think at the moment that's underexploited. A lot of the Japanese banks have very fixed IT systems that perhaps don't always allow them to innovate. Perhaps also there's linked to that, there's a bit of a cultural thing about them seeing fintech scale-ups more as competitors than partners. If both of those things could shift in a more flexible direction, that would be another big plus for Japan. So I would say the R&D point and doing more of that globally. And then, as you say, some of the kind of systems and processes and allowing them to be operable in other countries and other continents feels really, really important.
Japan's spending is significant, but also the research efficiency is relatively low. To your point where you said they actually spending a lot of money, but not getting the full money's worth out of it.
Perhaps the university sector in Japan probably needs to improve its collaboration with businesses, and I'm sure they're looking at doing this. And then also, I think there's a lot in Japan about open innovation. It feels almost like a catchphrase for many businesses. There's still quite a slow process, regimented process for actually getting to innovation. Whereas I guess elsewhere globally, companies cut corners, they get to the customer and innovate with the customer. They do regulatory sandboxes and innovate with the regulator. And they cut a few steps out. Pace of change just comes that much quicker when they're able to do that. Again, that's something that Japan looking to develop and looking to learn from. Improving its global links and global synergies will really help Japanese companies to develop technology more quickly and keep pace with other countries and actually even exceed other countries because of their inbuilt strengths that have been around for decades.
They're like innovation centers that the big financial groups have. Naturally, they went to Silicon Valley first, but really the second location, they all went to London. And the third one, then I would say they went to Israel. That would be my view from a global perspective. London being in a good spot there, but it's when the startups already exist. So on the fundamental research side, attracting much more of that into the UK is a great opportunity for you and one of the focus areas.
Yeah, so we're trying to be really proactive in terms of that area. The UK government published its R&D roadmap a few months ago, and that was really looking at how we built on our strengths and really trying to position the UK as an R&D superpower. And we're massive increasing government investment into R&D, up to £22 billion per annum in the near future. And linked through to that, what we're trying to do in the embassy is work with big Japanese companies, find out what their growth potential is in terms of R&D and what areas they're looking to focus on in terms of their innovation. And then look at the entire UK R&D ecosystem and the key universities and identify faculties in those universities, whether it's University for Cambridge, UCL, Imperial or Oxford or Edinburgh or Belfast. And if we find a strength, so UCL, for example, is very good at AI and has an AI centre, can we link up that AI centre with one of the big Japanese blue chips, introduce some of the professors from that AI centre to the Japanese blue chip and see if they can forge an R&D partnership? We've had a couple of missions out over the past couple of years. 2 years ago, we had an AI mission from leading UK universities and the Alan Turing Institute. And then last year, so in 2019, we had a mission focused on quantum sensing again, with some leading professors speaking to Japanese companies about that area of technology. So we're really looking to be proactive there and very happy to help support Japanese companies that want to build links with UK universities. The other area which is interesting for me is Japanese VC investment and how almost every big Japanese company I speak to these days either has a corporate venture capital team or is looking to set up a corporate venture capital team very, very soon. And while Japanese VC investment has perhaps lags a bit behind the US and Europe at the moment, it really feels that there's an intention to grow it. And there's real interest in blue chip companies in working with partners internationally to gain strategic technology advantages. So we try and support VC investment from Japan into the UK as well. And while the VC investment that we support is only a segment of the overall VC market and a relatively small segment, we have actually seen the VC investment which my department supports from Japan into the UK over the past 2 years has been higher than any other market. So it's been higher than DIT supported American VC investment into the UK or German VC investment or Chinese. That gives us real scope for hope in that developing further, I think, over the coming years.
It's also, again, super interesting because for once, from an execution perspective, the corporate VC part tends to move a little bit faster in making faster decisions because also a smaller specialized group. And from a market entry perspective, if you already have the investment, the organization knows that some vetting has taken place. You already got the stamp of approval. So if you enter the Japanese market and you're already invested by a Japanese company, whether it could even be a competitor, but the people know that they have been accepted into this club. The recommended approach, right? Find the investor first and then come to the market second rather than the other way around.
Absolutely. I think it's a great example where you can bring trade and investment together and there's massive synergies between the two areas. Japanese companies like SBI Investments investing into UK companies like Elliptic, which focuses on cryptocurrencies, then gives the UK company a network into the Japanese market and an opportunity to trade here and showcase its services. So it's a bridge between the UK and Japan, and in providing strengths and a win-win opportunity for both sides. It's moving in the right direction, it's growing, but we'd like to see grow far faster than it has been doing so far. And I think there's a big opportunity to do so, both for increasing R&D investment and also VC investment.
So now maybe to round it out, personally, I'm obviously much more focused on the FinTech sector, and it ends up sometimes a bit of an echo chamber. You just hear how great all of this is and how much development is being done and the future of digital finance and crypto and blockchain and all of these things. Obviously, there are many more industries and you cover the full range. There's 8 or so industrial sectors that you cover. If you now put FinTech into its rightful place, where does it rank among everything you see? What else is out there that's super interesting?
Yeah, so I'd say probably looking at relatively small companies, so UK scale-up companies, there are probably 3 industry areas which the UK is very strong at, and there's a really good congruence with Japan. So FinTech is one, AI is another, and then digital health or medtech is another key area. And then probably linked through to the UK's leadership of COP26 next year in Glasgow and the focus on renewable energies and climate change. Clean tech is another area which is very up and coming and is an area, again, where the UK is strong. Digital health and medtech is a really interesting area because, again, the UK, we call it the golden triangle between Cambridge, Oxford and London, where there's a huge pharmaceutical industry and lots of really good universities focused in the life science space and lots of technology companies or scale-up companies around that area as well, like Babylon Health being a good example. Those companies are really developing very, very quickly, and there's a great opportunity in areas like diagnostics, new technologies around telehealth for those companies to change the way in which we develop new drugs and new treatments, change the way in which the doctor interfaces with the patient, increase the pace of how we develop innovative drugs. So that's a really interesting area. And then I know AI is a very broad term and covers a whole range of different areas, but AI has been a real strength of the UK. And going back to the days of Google acquiring DeepMind, there's lots of really good UK AI startups and scale-ups which are coming through and which can really support bigger institutions in terms of how they interface with the customer, how they become more organized, how they reduce costs, and how they change their business and make their business cheaper to run. So probably on the tech side, I would say probably, clean tech, AI, and digital health, as well as FinTech, are 4 areas which I think are really exciting and really fast growing. And there's a high degree of congruence between Japan and the UK, where we can use the new FTA to bring forward new partnerships and develop them further. And then, of course, there's some much more important areas outside technology, where there are big established company relationships in the areas of manufacturing with the Japanese automotive industry in the UK, other areas of manufacturing like the chemicals industry, where again, there's a huge amount of change in those industries as well, which create new opportunities. So the move to autonomous and connected cars is a really good example. The move to smart cities, the movement towards digital manufacturing, all of those areas are developing at pace. And there's some really good opportunities for increased UK and Japanese partnerships. And just to mention, in the area of automotive and areas like aerospace and the use of cyber, the embassy this year is focused on a future of mobility great season, where we're really looking to showcase partnerships between the UK and Japan and bring together Japanese and UK companies. And we're looking to do an R&D seminar in February, where we have some keynote speakers from the UK. We'll be advertising that and trying to promote that to Japanese companies in the near future. And we've also got some cyber events that are taking place this month in November, focused again on getting some very good UK counter-cyber companies with the latest technology and getting them to pitch to Japanese companies online. So hopefully that would be successful and very useful for both sides moving forwards.
It was a wild ride across a number of themes. I'll leave it to you for some final comments, maybe.
To sum up, there's some real scope for optimism in terms of how FinTech and other areas of technology are developing in Japan. I think it's probably fair to say it's quite a difficult market to enter for scale-up companies from Europe and from the UK and from America. But it is actually improving in terms of the impact of COVID-19 in accelerating new technology trends, in terms of the Japanese government's new digital agency and the other measures they're taking to develop Tokyo as an international centre. The FTA, with its more ambitious chapter on digital, will underpin and act as a framework for building a stronger commercial relationship between the two countries. And I just really hope that we see more partnerships created between Japan and Europe and Japan and the UK in areas like R&D and VC investment as well. So I think some real causes for optimism. Not easy at the moment, but hopefully it will develop quickly moving forwards over the next few years. But thanks very much for your time today.
Thank you very much. And thank you for sharing your thoughts. When we had the call a few weeks ago, quite a few people on that bridge. So it's always hard to get into more depth. And so I'm very grateful that we had the opportunity to dive into all these topics a bit further. It was a fantastic conversation. Thank you, Darren.
Brilliant. Thank you.